This Spotlight on Investments is sponsored by Financial Independence Group. Our products are strong, but our strength is in our people. For more information, please visit joinfig.com. The SEC is proposing new rules to increase the agency's oversight of investment advisors. SEC commissioners voted 4-1 to approve a proposal that will enforce requirements of the Dodd-Frank Act. The rules are intended to provide clarity to certain exemptions for investment advisor registration. The rules also aim to require disclosure of more information by advisors. If implemented, the proposal will require many advisors to register with the SEC, specifically advisors to hedge funds and other private funds. They also will be held to broader reporting requirements, such as reporting the type of advisor services they provide and the amount of assets and type of investors in the fund. Certain private fund advisors may be exempt from these new reporting requirements. Those exempt include advisors to venture capital funds, advisors to private funds with less than $150 million in assets under management in the U.S., and foreign advisors. The proposal also says that advisors managing between $25 million and $100 million must register with the state regulatory agency where they have their main office, instead of the SEC. The FDIC says the number of troubled banks grew in the third quarter to 860. This is the highest level in over 17 years. The number of problem banks rose to the highest level since March 1993, when 928 banks were troubled. Banks insured by the FDIC reported increased profits from 2009, despite the increased number of troubled institutions. Banks insured by the FDIC reported a combined profit of $14.5 billion in the third quarter. The 2010 third quarter earnings were well above the $2.8 billion reported in the same period last year. But the banks saw a decrease from the $21.6 billion reported in the second quarter of 2010. The Federal Deposit Insurance Fund reported a continued deficit of negative $8 billion. This is an improvement from the negative $15.2 billion reported in the second quarter of 2010. A RIDEX SGI Advisor Benchmarking Survey finds advisor confidence in the economy and the stock market improved during November. The index serves as a benchmark of advisors' perspectives based on web surveys of registered investment advisors. The index rose to 111.75 in November from 110.63 in October. State Street Global Markets finds that investor confidence rose to 97.5 in November from 88.2 in October. The index considers 100 a neutral rating based on market trades. Investors are neither increasing nor decreasing allocations. The Conference Board's Consumer Confidence Index also finds consumer confidence rose in November to its highest level in 5 months. For more industry spotlights, visit producersweb.com.